All right, so you've been looking into this whole infinite banking thing, becoming your own banker.
Yeah.
We're going to dive into that with you today. Using all those articles and guides from Insurance and Estates that you sent us,
Yeah.
we'll unpack how it works, see if it really lives up to all the hype, and ultimately you can decide if it's right for you and your financial goals.
Sounds good.
So let's get right to it. What is infinite banking?
Well, it's kind of an intriguing idea because it really flips the script on traditional personal finance. We're so used to thinking about stashing our money in a savings account,
Yeah.
hoping for the best. But
Yeah.
infinite banking, it's really more of a wealth building strategy. And the key is utilizing a specific financial tool, a high cash value whole life insurance policy.
Okay, so we're talking about life insurance here, not just like a regular bank account.
Right. It's not your typical savings account. Think of it like this. A high cash value whole life insurance policy has a built-in savings component, and that cash value grows consistently over time. And here's where it gets interesting. You can actually borrow against it.
So instead of going to a bank for a loan,
Exactly. You're essentially borrowing from yourself.
so wait, I'm paying interest, but to myself.
You got it. It's a concept called recapturing interest. So instead of that interest going to a bank, it flows back into your policy, which accelerates its growth. You're basically leveraging the time value of money, a concept that's usually reserved for those big financial institutions, but you're doing it within your own personal financial ecosystem.
Okay, that sounds promising. But what about like the practical side of this? Like one of the articles mentions this asset multiplier blueprint. What is that all about?
Sure. So the asset multiplier strategy involves leveraging your policy's cash value to invest in other assets, which has the potential to multiply your returns.
Okay, so give me an example.
So let's say you're interested in real estate.
Yeah.
You could use your policy to secure a loan for a rental property, then use the rental income to pay back the loan. And while that's happening, your policy continues to grow tax-free.
Tax-free growth. I've seen that mentioned a lot in these articles. But honestly, it all seems a little too good to be true. Are there any downsides or risks to this approach that we should be thinking about?
Well, of course. No financial strategy is perfect. One concern that comes up is the potential for policy lapse.
Okay, how would that happen?
Well, if you were to withdraw too much from your policy or, default on a loan, it could impact your death benefit. And in a worst-case scenario, it could even cause the policy to lapse altogether.
Oh, wow. So it's not just about setting up the policy, it's about managing it responsibly over time.
Exactly. You need to work with someone who really knows what they're doing, a knowledgeable professional who can structure the policy in the right way and guide you on, responsible borrowing strategies.
Speaking of professionals, one of the guides mentions choosing the right insurance company. They even pointed out some red flags. What should people be looking for?
Yeah, not all whole life policies are created equal. You want to make sure you find a company that offers participating whole life insurance.
Participating whole life insurance.
Right. It means that the policyholders, they can actually participate in the company's profits through dividends. You also want to see a strong financial track record from the company, competitive interest rates, and a history of solid dividend payouts.
You mentioned dividends earlier. Can you explain a little more about how those actually factor into the growth of the policy?
Sure. So dividends, they're basically a portion of the insurance company's profits that are distributed to the participating policyholders.
Oh,
And you can do a few things with them. You can receive them as cash or use them to buy even more insurance, or you can reinvest them to increase your policy's cash value even more.
so it's like adding fuel to the fire of that compounding effect we were talking about earlier. It seems like there are a lot of moving parts here.
There are. And while infinite banking can be a very powerful tool, it does require careful planning and ongoing management. And that brings us to another point that people bring up: liquidity.
Okay, what do you mean?
Some people worry about their money being tied up in a whole life policy, not being as readily accessible as it would be in a checking account.
Right, and actually this source has a whole section on frequently asked questions and common objections to infinite banking. How do you typically address those liquidity concerns?
It's true that your money isn't as readily available as it is in a checking account. However, with a properly structured policy, you can actually access your cash value through policy loans relatively quickly. The key is to understand the rules and potential consequences of borrowing against your policy. We talked about avoiding those pitfalls earlier.
So again, it comes back to responsible planning and management.
Yeah.
It's not just a set it and forget it approach. It's a system that you really need to participate in and make informed decisions about.
I think that's a good way to put it.
So for someone who's considering this strategy, what would you say is the most important factor to consider?
Really understanding your own financial goals and risk tolerance. I think that's paramount. Infinite banking really emphasizes long-term predictable growth, which might be appealing to some, but not to others.
Right. It's about finding the right tool for the job, not a one-size-fits-all solution.
Exactly. If you're someone who values long-term stability, the tax advantages and the potential to build wealth steadily over time, then infinite banking might be worth exploring.
But it's not for everyone,
Right.
even though it's called infinite banking.
Exactly. It's all about finding a strategy that aligns with your own goals and preferences.
Okay, so before we jump to any conclusions, let's talk about something else that comes up a lot, a common counterargument to infinite banking. It's the buy term and invest the difference approach.
Oh yeah, BTID.
What is that all about?
So the buy term and invest the difference approach, it suggests that you buy term life insurance, which is usually cheaper than whole life, and then you invest the difference in the market.
So basically, it's like choosing between guaranteed steady growth within a policy versus the potential for higher returns in the market, but with more risk.
Yeah, that's a good way to put it.
So proponents of this BTID approach, they argue that you can potentially get higher returns by investing the difference, between those term and whole life premiums in the market. But doesn't that depend on like consistent market outperformance?
Right, and it also requires active investment management.
Which brings up a question. What happens if the market, takes a downturn?
That's a key consideration.
Yeah.
With infinite banking, your cash value is going to keep growing steadily regardless of what the market's doing. So you're not exposed to that same level of volatility as you would be with market-based investments.
That makes sense. That sense of stability does seem to be a big selling point for infinite banking. But what about the people who say that term insurance is just a more cost-effective way to get coverage?
It's true that term insurance premiums are generally lower, especially when you're younger, but it's important to remember that term insurance, it only covers you for a specific period. Whole life insurance offers lifelong protection.
Yeah, so with term insurance, there's no cash value component to use or build wealth with. It's purely for coverage.
Exactly. With whole life insurance, you're not just paying for coverage, you're also building a financial asset that you can use to your advantage down the line.
Which brings up something I noticed in one of the guides. It really emphasizes that infinite banking, it requires kind of a shift in mindset. It's about viewing your life insurance policy as a financial tool, not just like an expense.
That's a fundamental concept to grasp. People who advocate for infinite banking, they often see whole life insurance as a way to create their own personal banking system. It allows you to access capital when you need it on your own terms.
It's like turning the tables on traditional finance. Instead of relying on banks for loans, you become your own source of funding.
Exactly. And by strategically using policy loans, you can potentially boost your returns and really accelerate your wealth building journey.
That's a pretty compelling idea, but it also sounds like it requires a good amount of financial literacy and discipline.
Absolutely. Infinite banking, it's not a passive strategy. You need to be actively managing your policy, understand how policy loans work, and make smart financial decisions.
Which is why it's so important to have a trusted advisor to guide you through the process. As someone who can help structure the policy correctly, navigate the complexities of borrowing, and just make sure you're on the right track.
I completely agree. A knowledgeable professional, they can help you avoid those common pitfalls that we talked about, maximize the benefits of infinite banking, and just ensure that your policy is aligned with your overall financial goals.
Okay, so it sounds like this strategy might not be right for everyone. Who would you say is the ideal candidate for infinite banking?
Well, I think it's particularly well suited for individuals and families who have a long-term vision for their finances. People who are comfortable with the idea of delayed gratification, they're looking for a predictable, tax-advantaged way to build wealth over time.
So someone with a really high risk tolerance who's, chasing quick returns, they might not be the best fit for this approach.
Right. It's not about trying to get rich quickly. It's about building a strong foundation for long-term financial stability and generational wealth.
I like that. And one of the resources you sent over it actually talked about taking control of your financial destiny. That seems to be a big part of the whole infinite banking philosophy.
It's about giving individuals the power to become more self-reliant when it comes to their finances, to break free from the constraints of traditional banking and investment systems, and create a system that works for them instead of against them.
This whole concept of personal financial sovereignty, it's really interesting. It's like having more autonomy and control over your financial decisions.
Yeah, and that's at the core of infinite banking. It's about shifting the power dynamic away from big financial institutions and giving that power to the individual.
And that feeling of empowerment, I bet it goes beyond just finances, wouldn't you say?
Absolutely. When you feel more secure and in control of your money, it can have a positive impact on other areas of your life, from your relationships to your overall sense of well-being.
It's like this ripple effect, a positive change that starts with taking ownership of your finances.
Exactly. And I think that's why infinite banking resonates with so many people. It's not just about the numbers, it's about personal growth and the transformation that comes with being in control of your financial life.
That's a powerful message. So before we wrap up this exploration of infinite banking, I want to go back to something you mentioned earlier about finding a knowledgeable professional to help guide you through all of this. The guides you shared highlighted some important qualities to look for in an advisor. What advice would you give to someone who's just starting their search for an expert in this field?
Finding the right advisor is absolutely crucial. It's not just about knowing the products, it's about finding someone who understands your financial goals and who you feel comfortable working with. You want an advisor who's going to take the time to teach you things, answer all your questions, and give you a plan that's tailored to your needs.
So it's like finding a partner for your financial journey, not just someone trying to sell you something.
Exactly. Trust is key. You want to work with someone who has a fiduciary duty to act in your best interest, not their own.
And transparency is important too. You want an advisor who's upfront about fees, commissions, and any potential conflicts of interest.
Absolutely. Open communication is essential. You should feel comfortable asking questions, challenging things, and voicing any concerns you might have.
One of the articles mentioned specifically looking for an advisor who specializes in infinite banking. Why is that specialization so important?
Well, infinite banking is a pretty specialized field. It requires a deep understanding of complex financial instruments, tax implications, and how policies are designed. An advisor who's an expert in this area can help you navigate those complexities and make sure your policy is structured in the right way.
So this isn't something you'd want to just trust any financial advisor with. It requires a certain skill set and a real understanding of this specific strategy.
Great. Finding the right advisor can make all the difference in your infinite banking journey. It's like having a trusted guide who can help you unlock the full potential of this strategy and reach your financial goals.
I think that's a perfect way to put it. And I think it's a great place to transition from this general overview of infinite banking to your specific situation.
Okay.
So let's talk about what this could look like for you and your financial goals. What are some of the key takeaways you've gotten from our conversation so far?
I think what really stands out to me is the importance of making sure your financial strategy aligns with your values and your long-term goals. Infinite banking it offers a different approach to building wealth, but it's not going to be the right solution for everyone.
I agree. It's not about blindly following a trend. It's about making smart decisions that work for your individual needs and goals. What resonates most with you about this whole concept of infinite banking?
Honestly, the idea of building a legacy of financial security for myself and my family in the future is really appealing, and the tax advantages are a big plus too.
Those are both important things to consider. What about the potential challenges or concerns we talked about? Do any of those stand out as possible roadblocks for you?
I think the need for constant policy management and the commitment to a long-term strategy are things I need to really think about. I also want to do more research on finding the right advisor who specializes in this area.
I think those are all excellent points, and it shows you're really putting thought into this. You're taking the time to understand the ins and outs of infinite banking and see if it fits with your own financial philosophy.
Definitely, I believe in making informed decisions, especially when it comes to my finances.
And that's exactly what we aim to do here at the Deep Dive, giving you the knowledge and insights you need to make the best choices for your financial future.
Well, along those lines, I have one final question for you.
I'm ready. What is it?
We've talked about, the pros and cons of infinite banking, the mechanics, all that. But I'm wondering, are there other factors that might influence someone's decision to, use this approach or not? Maybe the psychological factors.
That's an interesting question. I think you're right. There's more to it than just the numbers. There's a whole layer of beliefs and attitudes that comes into play.
Right. Like some people might be uncomfortable with the whole idea of using life insurance as a financial tool. It goes against that traditional view of insurance just being there to protect your loved ones if you pass away.
I can see that. It's not an easy shift to make,
Yeah.
to start thinking about your life insurance policy as an active part of your financial life instead of just, an expense.
But then on the other hand, for some people, that shift in perspective can be really empowering. It can feel like they're taking control, building something for themselves and their future.
It's like taking back your power instead of feeling like you're at the mercy of banks or the stock market.
Exactly. And that sense of control can be really motivating. It can make you want to learn more about managing your money and taking charge of your financial future.
I think there's also a big element of trust involved, too. Trusting the concept itself, trusting the insurance company, and trusting yourself to manage the system well.
Yeah, you're right. It takes time to build that trust. It's something you really have to research and think about carefully.
It's about finding a system that fits your goals and your values and, your comfort level. If you're not comfortable with the whole idea of infinite banking, it's probably not going to work for you long term.
Which is why those resources you shared are so helpful. They give people the information they need to really dig in and make a decision that's right for them.
Exactly. We'll definitely link to all those ebooks, guides, and webinars in the show notes. So if you're listening and you want to learn more, that's a great place to start.
It all comes down to knowledge. The more you understand, the better choices you can make about your finances.
I couldn't agree more. It's been great talking about all this with you today. We've covered so much: the basics, the benefits, the risks, even the psychology behind it all.
I hope it's been helpful for everyone listening.
Me too. And as always, we encourage you to keep learning, keep asking questions, and keep exploring what works best for you on your own finance journey.
Absolutely.
So until next time, happy investing.